Thank you for tuning in to another edition of the Vulcan Report. All right, the first chart, we're jumping right into it. We're looking at the E-mini S&P 500. As you can tell, it has been in a nice little uptrend here ever since we popped from the bottom, the low that we hit on October the 9th. We've run up since October the 9th. We ran from the 1640 lows up to a high on the 21st, which was yesterday at 1742 and a half. That is quite a run. So now where do we go from here? Well, current resistance right now is going to be around the, I want to say, the 1742 and 3/4 level and the 1705 even. So that's where we're going to be for the immediate support and resistance zones right now. Could it get a little higher than that? Yeah. But I'm going to say this red line right here is going to be support once we do get any sort of a minor correction. We also have support at this black line here. Notice how the red line is rising and getting closer to this black line here. And we should get back within the bands, the volatility bands, over the next couple of days. But we are in a very bullish phase right now, hence the bull in the corner here. And you see the trend here is bullish. We're trading above the Kumo cloud, which is here. Okay, that's all the way back down here at the 17. I want to say, let's put this at 1691. We'll just say 1691. That's where we are right now as far as the immediate supports for this bullish up phase move. But when you get down here to your Kumo cloud, you're down at the 1666 and 1656 zone. That's going to be the Kumo cloud from here. I'm expecting that Kumo cloud, as the uptrend continues, to get a lot higher. I would not be surprised if this 1740 to 1720 range becomes new support for the next bullish phase up. Back during January of this year, when I was on the Wide Awake radio show with Charlie McGrath, and I gave my projections for the year. If you recall, those of you who follow the show, I informed you that we should see a major bullish phase that would last the entire year. So far, the market has been keeping in touch with that. We did get some good news on the job front, so any good economic news after the shutdown is going to help bolster the market further. It looked like we were going to fail at this last resistance level here, where we hit the 1726 level, and then we immediately corrected. As you see, we kept coming down for quite a while. This was a strong bearish phase. All right, it lasted a while, but now we've started a new bullish phase. The last bullish phase that we had would have been back here, September the 3rd, and then it ended on September the 23rd. So we had a nice 20-day run, 20-day cycle run. So we're now into, let's see, 1, 2, 3, 4, 5, 6, 7, 8 bars. So that'll give us another 12 bars, another 12 days possibility of this bullish run cycle. And that could take us up closer to the 1780 handle. We might even break the 1800 on the S&P handle. So each new high we hit every day is going to be a new contract high. I will caution everyone, though, like I always have, that this is 2007 playing out all over again. Remember, for 2007, we kept hitting new contract highs, market kept rallying, but then a year later is when we had the reckoning in 2008. That's what's setting up again. As you see, the Russell, the Dow, and the S&P are all hitting new contract highs. Once again, we have the NASDAQ 100 not participating. Yes, it is trading at higher levels than it has in several years, or I would almost say really a decade, but even still, it's not hitting new contract highs. It never got back to that 5,000 level, and it probably won't. We still have another 2,000 points to go in the NASDAQ. 2,000 points. Not 200 points, 2,000 points to get there. That's a lot of points, even for the Dow. And we're just not there. If this bullish phase continues, no doubt we would take that out and hit that and keep going. But as you know, nothing goes up in a straight line, and it's going to take a lot to cause that to happen. I don't think we have another, decade of a bullish run like this. It's even getting more difficult to call it day by day, week by week, only because we know that the economic recovery is a joke. If anything, the economic recovery is really the depression in disguise, getting worse and worse and worse with no end in sight. But the market doesn't count. It's bullish. So as long as this bullish phase continues, we're going to keep buying the S&P, and when it corrects, we'll look to get short again. But until then, it's long city. We're looking to buy the next breakout from this position here. If it does break and give way, then we'll look to start shorting it again. So I'll put those signals in the trading room. I will not put buy and sell price triggers in the video. Just analysis for now. Alright, let's move on, take a look at gold and see how that's moving now, because I've been getting questions about how is gold and the silver responding. Alright, taking a look now at the gold chart. As you can see, we are trading below the Kumo cloud. We managed to get up to the bottom of the Kumo cloud, which is this thick brown line here, and we spiked inside of the cloud, but not really trading inside the cloud. Not any bullish momentum to push prices higher. We have come off the support lows here after we were negative pulse waving, and then we almost reversed right out of that, breaking that downtrend cycle. However, the trend is still bearish, hence the little bear in the corner, and you see the reading here bearish. We have bullish momentum trying to come in, but not enough power yet behind it to push us outside of the upward part of this Kumo cloud. We need to get out of the cloud, which is going to put us at the above 1362. Just to make that happen. So right now, that 1362 is going to act as upside resistance. The immediate upside resistance right now is going to put us around, I want to say, up about right here, around 1331. 1331.7 is immediate resistance, and if we can get above that and get something going, then we'll hit up to the 64 handle. So 31 and 64, so we got a 30-point price range that's going to act as our area of resistance in the gold. I would not be surprised if we're just setting up for the next leg down, which will put us back here at this red line here, this red line support of 1271. And then next strong support is going to be at, I want to say, 1249. Alright, so this is our zone that we're headed when we head back down. This is the price projection target, and if we can break out above where we are now, this here is our target. So we're looking at a upside target of 1362 and a downside target of 1249. So quite a ways to go, quite a wide range, but really no trend yet. All right, even the bear downtrend that we had, nice drop here, but really nothing long and significant. We really kind of been chopping around here, as you can see, between 1366 and this right here. There's a nice strong support around this area here, this 1259 level. So very wide range, wide consolidation range. Really more so of a day traders type market, because there's not a lot going on here. There's no story to make the gold do anything except for more money printing. But even that is not really helping it out either. Looks like every time it breaks out here, it gets smacked right back down. Look at this. You know, we came down, smack back up, and then they break it right back down, break it back down again, new low. Each time there's a new low. Here we go, here we go, here. So now this is third time as a charm, right? This low, and then this low took out this low here took out this low here. So now this next leg down should take out this and put us well below the 1245 handle on the gold. Alright, taking a look at the silver chart, it's even more consolidated than the gold chart. As you can see here, just sideways range. You see when we made this drop, this long bearish candle here, notice how it showed you it built the support, and then we came right back, took out the previous high right here, and then what do? We came right back down to the bottom of the range where it acted as a support, tried to rally up, then we put in a new low, then the market tried to break out again, then here's another new low, okay, just nipping the old low by a few cents, a few pennies, then roaring right back again to where we are now. Now the only difference is that the silver is now nicely inside the Kumo cloud. Upside resistance right now in the silver is at 2290. Alright, bottom side support is going to be at 2104 and 2043 respectively. Still nothing going on here, even though we've tried to lock in both bullish and bearish trends. Nothing has surfaced from it. Here is where we locked in a nice bearish trend here, but we didn't go lower. We tried to lock in the bullishness for a day, nothing happens. We tried to lock in another downtrend, instead we went higher. Tried to lock in a bullish trend, we did nothing but break to a new low. Here, this bullish trend actually got some legs and started running, got a little downside momentum, came to an abrupt stop. Now we're trying to lock in another bullish one. Can it run from here? Can it break out from here? It's going to go either way, but as you can see, we've been consolidating now since September the 12th. And now here we are, October the 21st. So well over a month, and we have just been doing nothing. Alright, just sideways. Almost a month and a half of the sideways action in the silver. Nothing to do here. Again, it's just a day trading type of a market. Well, you're lucky if you walk away with a few pennies a day. That's about it. That's all you can do when the market is not trending. You either stay out or try to take a few pennies here and there. Alright, finally finishing up with crude oil. Crude oil has been in a nice downtrend, even trying to lock in bullishness along the way, but as you can see, from this spike back during the Syria fear, and on August 28th, when we hit that high of 112, we've crashed all the way down as of yesterday to 99.41. When the market reopened last night at 6 p.m. Eastern Standard Time, it gapped down to 99.22, I believe, and then bounced right back to the 99.41, 99.60 level. So I don't know where it's at the moment, but as you can see, it is a lot of bearishness marked in, and we have not put in a bottom yet. This is looking like it did about a year or so ago, where this market did the same thing, and we went all the way down to the 77 handle before turning back up again. And as you can see, when crude gets running, it can run. And you know, when we top out, you see what happens. There's these huge price breaks. And I'm seeing the same thing set up now, where it's looking like it's going to do the exact same thing. And it can also consolidate for a period. Look at this. And we just went absolutely nowhere, just consolidating. That can happen too. So I'm going to take you back real quick. find it. Okay, here we go. This is February of 2012, where we were in a nice uptrend here, and then the market fell down. Alright, we dropped from May all the way down. Look at this. Look how we came from May all the way down to June, and here's where we hit that 81. So we dropped from 106 on May the 2nd down to 81.07 by June the 12th. See what a massive drop that was? And then here's that 77 I was telling you about, where we hit 77.92 on June the 22nd. So that was our bottom right there. And then on June the 28th, we hit 77.70. Alright, so here's where we built that support foundation right here in June. Alright, toward the end of June, and then the market came back up. I'm seeing that same type of price action happening again now. We're falling from the 100 mark all the way down. So I'm anticipating that we're going to come back down and test this level again, or get somewhere near it. So between 83 and 77, that's going to be our range of support where we're headed now. The price action is acting very familiar if you look at where we were a year ago to where we are right now. Now let me just go back for a quick second here. Okay, October the 20th, let's see. Alright, October the 20th of last year, that's where we are now. You figure we came starting on the week of October the 10th, we were at 93.66. Okay, 93.66 is where we were. We're not far away from there now. All right, at the 99 level. So here we are. You know, mid 90s a year later. So really, we haven't gone anywhere. We're exactly where we were a year ago, but we're in a falling down position. So right now we're on target. My target for the crude oil is that 77 level. I'm going to see if we can hit it. Maybe even take it out. Maybe even fall below it. The only way crude oil gets legs and runs again is with more warmongering fears. If some war breaks out or some kind of military activity, then that can make the crude oil spike again. But barring any kind of news like that, I just don't see it. Upside resistance, immediate upside resistance right now is going to be back at the 103 price level. Above 103, it's the bottom of the Kumo cloud right here at 106.47. Top side 108.12. So that's where we are, and that's all I have for now. Just remember that any kind of pop in the stock market may give you a little pop in the gold and silver, but remember they love to smack the gold and the silver down. So don't be surprised to see another huge smackdown in the metals, regardless of what happens in the equity market. Thank you for tuning in to this edition of the Vulcan Report. Remember to take what you can and give nothing back.